Hey there, it's Mike Langford. Welcome to another episode of the SoFin Podcast, part of the Vise Marketing Podcast Network. This week on the show, I have Runik Mehrotra and Samir Vasavada, the founders of Vise. Now, you may not be familiar with Vise just yet, but chances are your financial advisor and the wealth management firm that advisor is affiliated with have heard of Vise because they are quietly changing the way that your investments will be managed. Now, most of you, if you have a financial advisor, have your assets managed in a model portfolio. And for the most part, that's been okay for you, right? It gives you a broad exposure to a variety of asset classes mixed in a certain way that match your risk tolerance and your time horizon. But as Runik and Samir observed, it's really missing a lot of your needs. Like, what if you want to avoid companies that are in the fossil fuel industry, or you want to make sure that the companies you invest in have a diverse board of directors, or you want to avoid Facebook because you work at Facebook and you don't want to be overly concentrated in that stock? Well, you can't be invested in most model portfolios because they're investing in indices, and those indices might have petroleum companies or lack diversity on certain boards or have Facebook as a major component of the index, right? So Runik and Samir started thinking, what if they could make it really easy for a financial advisor to create a custom portfolio for their clients that not only took into account their risk tolerance and their time horizon, but also took into account their preference for a diverse board, for their desire to avoid companies that are polluting the environment, for their desire to avoid certain companies, to avoid overconcentration risks, and so on and so forth, more and more attributes. Now, the challenge with doing a custom portfolio like that is it's incredibly labor intensive, right? So it would push up the cost of rendering financial advice to clients way, way up. And that's a problem for you as the client. So how did they solve this problem? Artificial intelligence and machine learning, right? Let the computer do the heavy lifting of figuring out which companies to invest in for the portfolio and do all the other stuff that you do when it comes to portfolio management, right? Rebalancing and tax loss harvesting and all that good stuff. So you are really going to love this conversation with Runik and Samir. I assure you, it's really, really cool. And on a side note, this is the type of thing that keeps me energized and enthusiastic about our space. In fact, it's funny. Runik and Samir had actually asked me about this, like, hey, you've been in the business for a long time. What keeps you so excited about this space? And they're like, it's stuff like this, right? I thought I understood the portfolio management aspect for financial advisors and where it was headed. I really thought we're going towards model portfolios. More and more financial advisors have been implementing model portfolios for the reasons we talked about earlier, right? They're cheap for the client. They're cheap to manage for the advisor as well. And they're really easy if an advisor wants to sell his or her book of business, either when they're retiring or they just want to exit the business. The acquiring advisor can really easily pick up a model portfolio investment management process and implement it in their business and not break a sweat. But then along comes Runik and Samir, and they're like, yeah, but that's not the best way to do this, is it, right? And frankly, we're almost doing our clients a disservice by not giving them custom portfolios. So let's use artificial intelligence and machine learning to give a better solution to the clients and to the advisor. And here we have Vise. So really, really cool stuff. I love it. Like I said before, you're going to really enjoy this conversation. Okay, but before we dive into the conversation with Runik and Samir, make sure you check out the InvestNet Yodelay Launchpad podcast. It's the newest show on the FinServe Marketing Podcast Network. On the show, we are talking to people from the entire global fintech ecosystem, and the one common glue factor, InvestNet Yodelay, right? Yodelay makes a lot of the fintech world go around, so you're going to want to check this show out. If you like the SoFin podcast, you are going to love the Launchpad podcast. So head on over to finservemarketing.com/podcast. You can check out that podcast as well as the others. That's the best place to go if you want to find out about any of the shows on the network. Okay, I think we're getting close to setting a record for the world's longest intro here. So no more ado. That's right. Without further ado, let's get to it with Runik and Samir of Vise. Let's do it. Well, Samir and Runik, I'm so glad to have the opportunity to chat with you guys again. It feels like forever. I know it's only been a little less than a year since we last chatted on the Modern Financial Advisor podcast, but welcome to the SoFin Podcast.
Yeah, thank you so much for having us, Mike. Really glad to be back, and a lot's happened since we've last chatted.
Yeah, thanks so much, Mike. I think time is just like moving slower this year. And so, March feels like ages ago.
Isn't it hilarious how that happens? Like, there are times, especially when, you become a dad as an example, you have your kids and, my kids now are 15 and almost 12. And I feel like they've been with me forever. Like it's hard to like even process the time like pre-kid. But then you're also like, you see these pictures pop up in your Facebook memories, whatever. You're like, oh, that was just like yesterday, so it's kind of strange. Time flies by and your startup is your baby. It feels like you've probably been doing this forever, but it's when you look at it in terms actual times, not that long.
Yeah, baby's starting to grow up.
That's right. Speaking of baby growing up, you guys just landed a Series B round. You said.
Yes, we did. It's exciting. I think it was a unique case. Sequoia actually did the Series B as well, so they did the seed A and B. Doesn't really happen all too often. It was Sequoia Capital, Bond Capital. So that was led by Mary Meeker, who's Hall of Fame analyst
Love
from the
Mary.
dot-com boom. Patrick and John Collison, the founders of Stripe. Alexander Wang from Scale, Dylan Field from Figma, Human Capital. A handful of other really strong investors. Also, really notable financial institution, Allen and Company. Both is joining in the round and also as a customer of the product.
That's awesome. Well, congratulations on that. Well, I guess before we dive in a little deeper, for those who don't know, let's get maybe the 60-second elevator pitch that would get a company like Sequoia so excited that they would be in that seed A and the B round, and all those folks you mentioned. What got them so excited?
Yeah, of course. I think we're tackling a really big problem, right? It all kind of stems to this idea that, finance is very personal and financial advice is very human, right? But most financial advisors, although they've got the superpower, which is relationship building, they're the best in the world at it. Most advisors really struggle to differentiate on where their kind of core value add is, which is investment management. They're oftentimes kind of providing their clients that same generic portfolio of mutual funds, ETFs, investments that aren't really personalized to their clients' needs. They're expensive, they're hard to manage. They just don't necessarily give their clients all too much of a reason to succeed. So we've essentially built this AI where we can analyze the client's investment needs, how much money the client has to invest, goals, net worth needs, build a personalized portfolio of individual stocks, bonds, and other assets on the individual client level. So not necessarily the generic kind of managed strategies or ETF allocations, but a truly kind of personalized portfolio for every individual client. We then provide the tools to automate the management of the portfolio, so active rebalancing, tax loss harvesting, with the icing on the cake, as we call portfolio intelligence, or otherwise intelligence that kind of helps the advisor tell the story of the portfolio. So the justifications, the talking points, the market commentary, the why behind their portfolio, so the client can kind of better understand, here's why this portfolio is right for me. So our whole thesis is kind of surrounded by this idea that, with the advisor having the superpower of relationship management, we should be able to do everything else. So the advisor can focus on their client relationships and growing their practice and, providing the best experience possible for their clients, but we can automate all of their investment management responsibilities and do it in a highly personalized way for their clients.
I love it. I love it. Now, we talked on the Modern Financial Advisor podcast, and one of the things that really popped to my mind when I thought about Vise and the solution is like, oh, this is like model portfolios in terms of the ease of execution on it, but it allows you to have a custom portfolio. So, for all those advisors who had made the decision to use model portfolios in order to make their business more scalable and more efficient, the challenge was with that, as you kind of alluded to there in your pitch, is yeah, but you're kind of watering down the asset management deliverable, right? For the client, you're not really providing the level of customization, the level of suiting the investment management to the client's actual needs and preferences. But here you have made this super easy. So I thought it was really, really fascinating. Like all startups, however, timing is everything, right? So this solution, I think, comes at a really interesting time for the industry. I was doing a talk a few years ago at SoFin at South by Southwest, the event that I host every year. And I noticed noted the parallel between Walmart and Robinhood, right? So Walmart was launched in 1962, right? 6 years after the interstate highway system was created. So it kind of made the concept of Walmart possible, right? Be able to move goods and services from point A to point B efficiently. It's suddenly possible with the interstate highway system. And then the iPhone comes out in '07, and then 6 years later, Robinhood launches as the first, mobile only brokerage. So in both of those cases, the distribution made all the difference. When you think of Vise, what is it about this era that we're in, particularly for financial advisors, that make it appropriate, make the timing right?
Yeah, I think that's a really good question. It's interesting that you bring up distribution because I think that's a huge part of our pitch. Rather than, I think, our approach is that the distribution has been around for a really long time, and that distribution is financial advisors. Ultimately, the way we think about it is the financial advisor's end client is our true end customer. That's the person that we want to make happy with customized portfolios that fit their needs. And the financial advisor is the conduit of that. They're the ones who are the best to explain that portfolio. They're the person to talk through that, build that client relationship, and understand each of the client's needs, but they're not necessarily the person that should be deciding which specific portfolios make the most sense. Instead, ultimately their business hinges upon the fact that their clients are happy with their services. And so that's kind of our approach, and the distribution is via the financial advisor. I think what's incredibly interesting is over the past 20 years, we've seen this independent financial advisory segment just explode. And I think the reason for that is the barriers to entry to creating a new RIA go down day and day, right? So I think 25, 30 years ago, it was incredibly difficult to leave and start your own advisory shop. There weren't tools like RIA in a box or NCC compliance that allow you to quickly spin up an RIA. There wasn't a ton of technology to build your RIA around in any ways. And accessing new clients was incredibly difficult. And so the vast majority of wealth was delivered and managed, via large institutions like Goldman Sachs and Edward Jones. But I think now the advent of better technology in this space combined with the compliance hurdle going down significantly with these tools that allow you to easily spin up RIAs has created this huge shift of assets away from institutions towards independent advisors. And I think we credit that as well as advisors adopting new technology products over the last 3 to 4 years in record numbers as kind of like the key elements to why now and why this business couldn't have been built 15, 20 years ago, but can definitely be built now. So it's an interesting perspective. It's an old distribution channel. Financial advisors have been around a long time and they've been providing their clients value a long time, but selling into this distribution channel was incredibly difficult until today.
Yeah, you're 100% right on that, by the way. As somebody who's been in this industry for a while, you really start to appreciate how important financial advisors are as a distribution channel, right? There's a reason why they're there. You hit it at the beginning with about relationships, right? That the advisors have really good relationships with their clients. They're really good about, connecting with a prospect and helping that prospect walk along. But part of the challenge is, and the reason why advisors are very much necessary, is the average American knows next to nothing about finances, right? They really don't understand what a stock is. They don't understand what a bond or a mutual fund. They really just don't, because they weren't educated to do so. And then not only that, even if they do have some level of knowledge, they're not going to have the discipline to spend the time thinking about the process, right? Because it's not just about the individual security. It is about the process of financial planning, of thinking about how do you get from point A to point B. And then they also don't have the emotional stability, if you will. And it's not to mean like that, you got a bunch of crazy people out there, right? It means when you make a decision for your own personal portfolio, if something goes wrong, can you be dispassionate in the decision-making process to say, all right, I'm going to stick with this because that all the assumptions I baked into that portfolio are still true. We're just in a momentary blip right now. Or are you going to overreact, right? And so lots of evidence shows that people who manage their own portfolios woefully underperform professionally managed portfolios just because of that emotional thing. So I think you're 100% right. And I think the other thing that was really interesting that you said, and I'm glad you brought it up, is the move to RIAs, right? Individual advisors going and starting their own businesses, whereas before they might have just stayed with the wirehouse for a long time or stayed at another firm. But you have a lot of people going out and starting these what are small businesses because they can, because it's relatively easy to do, right? That the cost has come down, the ability to acquire customers, clients has been a little bit easier with digital technologies and so forth. And now with solutions like Vise, it makes the investment management process a lot easier as well.
Yeah, I would totally agree with you. And I think, the interesting thing just to point out on your distribution channels is that financial advisors have historically been the predominant distribution channel for the entire financial services industry for all different types of new financial products, both on the institutional level as well as on the independent level. So, it's really exciting to see, like, yes, Robinhood, was made possible by the iPhone, or Walmart by, the interstate. But we think that, financial advisors are, both having been historically the predominant distribution channel, will maintain that just because of how strong of a value add they provide.
Yeah, I agree. I agree. What's been the biggest challenge you faced during these early days of getting Vise off the ground? And now here you are, successfully landing Series B through one of the most storied venture capital firms in existence, right? Sequoia Capital is legendary. Uh, but there must have been some hurdles, right? Some challenges along the way. And those can be, individual personal challenges, or they could be technical challenges that you had to overcome as well. What were some of the bigger ones?
Yeah, for sure. I mean, I think, there's obviously been, quite a few technical challenges, which Runik can for sure address. But I think, like, just on a more personal level, we were targeting something in an industry that wasn't really, all that sexy or interesting to Silicon Valley. And we were starting there. It was this narrative that robo advice was the future. And we had our own kind of narrative, which was financial advisors are actually the future. And the human is the most important part of this process. I mean, it was like kind of challenging the status quo in that sense with the status quo. And I think, that, and then we'd also kind of taken this industry with a new perspective. We started this company when we were really young, and we had this very differentiated perspective on the industry. And, people were like, hey, what, why are you guys allowed to have this opinion when you haven't been in the financial services space, for the last 20 years? And our answer to that was, sometimes I think people with new perspective, not having had that prior experience, can oftentimes have, some of the most transformative impacts on the space. We thought about our inexperience as almost like a benefit because we didn't have any kind of preconceived notions, and we could think about the space in a very differentiated way.
Yeah, I think what got Sequoia excited was that we were also able to build an incredibly experienced team around that as well, who had tons of experience in the space and really understood kind of all of the different pieces. But yeah, I think that what Samir said is exactly right. I think early on, there was this process or almost like opinion that financial advisors, that industry will die off in the next 20 years or 15 years. But I just don't think that's going to come true. And I think Silicon Valley is realizing that now. And so early on, I think we were coming up against that point a lot. But I think we've done a really good job educating Silicon Valley, and the success of Vise so far, I think, has been like a pretty big counterexample.
Yeah, I agree with you 100%. There, the notion that robo advisors would eliminate and kill off financial advisors as a profession that was an assumption, I think, that really missed the mark, right? And there are going to be some people who use robo advisors exclusively, of sure, but I would put those folks probably in the same camp as people who use Cricket at home and manage their finances to a T and do their budgeting every week, right? There is that segment of people who are do-it-yourselfers, self-starters. The rest of the universe is going to need somebody to be there for them. They just are. It's the same way that you see lots of people who use personal trainers, right? Or coaches for whatever sporting activity they're getting into. They need some guidance there for that. So that I don't think we're going to see financial advisors go anywhere. You're going to see them augmented by technologies like Vise. You're going to see them scale in different ways and use technologies from on the communication side to interact with people, but you're just not going to see that profession disappear. You mentioned something there about that you were young when you started the company, right? And you're still young, right? Take us behind the scenes of what it's like to be teenagers at the time when you first started tinkering on some of these ideas, stepping into the world dominated by old dudes, frankly, right? I mean, to be fair, I mean, on Wall Street, there's a lot of young quant brain power, and in Silicon Valley and the Bay Area is renowned for young founders. But the industry that you're selling into, right, the financial advisor industry, is kind of dominated by people who are 60 plus.
Of course. I think it's funny you mentioned that. I mean, most of the quants, albeit incredibly smart, are on the hedge fund side, not necessarily kind of in sales or client facing, kind of like they're not the ones at the conferences. So I think what was funny is like, there were times when we were like, I don't know, 17. We were speaking at these big conferences, and we would be the youngest person in the room by like 20 or 30 years. It's crazy. But yeah, it was exciting. I think, the interesting thing is people listened when we spoke, right?
Yeah.
It was clear like we had something different to say than everyone else on stage.
It's interesting to me when I think of you guys, and this, this will sound like I'm pumping you up a little bit, but as a student of business history and innovation history, your story has a lot of Bill Gates and Paul Allen feel to it, if you will. I mean, there's lots of smart young people out there, but few of them also have the courage and the social fluidity to kind of walk into a room full of these older people and convince them that they should listen to you, right? Because you think about, if you go back and watch, there's actually a Bill Gates documentary that's on Netflix right now that's incredibly good if you get a chance to
Great
watch
documentary, of course.
it. Yeah. But those early days, right, where they're going into relatively big companies, and you were doing the same thing in high school. I read I think it was a TechCrunch piece where they profiled you guys, and you were doing that same thing of being brought into companies as high school students to consult on AI. How did you handle that? And I know it's kind of weird to ask you, like, how did you live your life? I mean, you just lived your life, but was there some recognition on your part that, like, hey, this is not what the average 15-year-old is doing here or whatever at that time, and then you just had to mature in that way faster, and you had to figure it out?
Yeah, I mean, I think the interesting thing is, I don't know, I think both of us have known our entire lives, like, this is what we love doing, right? Like, some people have a passion, some people have things that get them excited, others have a calling. And I think in our sense, like, this was kind of a calling. Like, it felt like this was the right thing to do. And I think like the actual act of the like consulting and, helping some of these big investment banks out, then eventually building the company was all very intuitive to us. But I think the people around us, not so much. And I think that was probably the most challenging part about it. Right? It was like, it's like playing a video game you love playing, but your parents saying like, hey, you can't play this anymore. Right. I think that was the tricky part about it, and us doing something very different than, most of our peers, as opposed to the actual working with some of these institutions. Because I think in a weird way, the institutions really respected us. And we weren't out advertising. We were, however old we were.
It's really, really interesting. It's fascinating. I kind of think about it as like an elite athlete, right? There are certain people who are just going to be gifted in a certain area at a young age, but not only gifted, but that you kind of decide to put the work in, right? That you decide to follow through on some of those gifts and then pursue the things. And it's really, really exciting. And again, it's time and time again, we see that happen in the business world as all of our famous and most favorite entrepreneurs in history got their start while they were young. Shifting gears a bit, walk me through the transformation process of Vise being an AI-driven recommendation solution for advisors to the RIA model, where you function as a sub-advisor with discretionary access to client accounts, right? We had a little bit of a conversation on that on the Modern Financial Advisor podcast, but I thought maybe we could dive into it a little bit here, because that was, I wouldn't call it a full-blown pivot, but it definitely took a mindset shift on your behalf. And then you had to kind of rethink the business a little bit in order to take it to the next level. If you're digging this conversation with Runik and Samir and want to hear more about how Vise is working for financial advisors and their clients, head on over to the Modern Financial Advisor podcast by Trulytics on your favorite podcast platform, Apple Podcasts, Spotify, Stitcher, SoundCloud, you name it, because the gents came on the show and we went in depth on how Vise works and what sets the solution apart from portfolio management methodologies used by many advisory firms. The key takeaway: Vise makes creating custom portfolios for each individual client as easy as giving them a model portfolio. It's a fantastic conversation, so go check that out. Okay, now back to the show.
Yeah, I think that's a good question. I think the way that we thought about that is originally we just wanted to get the product in the hands of as many advisors as possible. And so the approach was, okay, how do we provide as much value to advisors as possible? How do we provide portfolio recommendations, research, et cetera, powered by artificial intelligence? And I think advisors loved what we were doing. And they constantly told us the next step was, can you put these recommendations to work? Can you put this research to work? Can you actually build the portfolio, manage the portfolio? And then at the same time, from the compliance side of the businesses, we kept getting, hey, we'd prefer if Vise was the discretionary manager or was executing trades. And so a mix of kind of those two things made us realize that the business could be much bigger if we actually were an asset manager. And we spent some time looking at some of the asset managers in the space. And I think everyone's surprised that the lack of innovation from large mutual fund companies, right? The product has stayed identical over the past 30, 40 years. And it's funny, you can't really name very many other businesses where the product has remained identical for 40 years and they're still dominant. And so I think Samir and I were like, this makes a ton of sense for us to become a better asset manager that's more customized and manage every account differently rather than trying to pull all of these accounts into models. And so it felt like the natural progression of things, start to provide research to advisors and then, tons of feedback around, can we just be a better manager? And I think that's the approach we took. So we spent some time getting registered with the SEC, which was incredibly interesting and fun. And then, built partnerships and processes with custodians so that we could manage money as a sub-advisor.
Did you have to make some, I would imagine, had to make some changes on the hiring process as well there, right? Like you set up one way and then all of a sudden you're kind of having to change the business in a fairly significant way to be able to do some things that you weren't doing before. What was that like for you? You have to go out and find a whole bunch of new people?
I think we're lucky to have an incredible team behind us that has just been so good at transitioning from specific things. I think, advice to anyone running a startup, I think your earliest team members, you select for ability to do so many different things well. And so even though their day-to-day may have changed pretty drastically as we became a manager, it still, I think, was, incredible how well the team did at doing that. And so I think, every element of a good startup, I think, or one great element of every good startup is that you have a team that's flexible and great at a lot of different things, because the product that you're building early on is constantly changing and you're constantly getting high fidelity data from your customer about what they want and what that looks like. And so I think we were lucky where we didn't have to go out to the market and hire a ton of new people and cycle the team because of how flexible our team was.
Interesting.
And how good at, I think, context switching.
That's awesome. It's dawning on me as I'm listening to you that, look, you're not just good at this AI-driven custom portfolio thing. You're not just really bright technologists. You also have really bright business minds. And it really feels like there must have been a process in which you developed these types of leadership skills rapidly, right? When I listen to you talk, there's a visionariness to it. There is almost like wisdom that might have been accumulated over 20 years talking, whereas your career hasn't spanned that long yet.
Our lives have.
What's that?
Our lives have.
Exactly. There's that. But I guess what I'm trying to get is, and the reason why I'm asking this type of question is, many startup founders are listening to this podcast, and maybe many soon to be startup founders are listening. And there's a maturation for everyone, regardless of what age they start at. There is so much learning that has to come so quickly, and there's so much personal development that has to happen along the way. I wonder if maybe you can give people a little peek behind the curtain of some of the personal development that you've sought out and had to go through. Because it really does sound like you guys had learned a lot, but the way it comes across is so polished. It doesn't feel random. It really feels like maybe you've gone through a process either with coaches or Sequoia offers some level of training on leadership and so forth when they invest in a company. How have you developed those types of skills? You know what getting at here?
Yeah, thank you so much. Yeah, really flattered. I mean, I think the first, handful of years in the journey, we had to figure it all ourselves, right? It was just making mistakes and making more mistakes and then trying to learn from each of those mistakes to see, what could we have done better? I think that was kind of first and foremost, but then as the company started to mature and we started to build networks, we did something interesting in the sense that we brought, advisors, people that could really help us to the table, that were best in the world at specific things that we could always kind of understand how they would have solved a particular problem, right? In their perspective on a specific situation. And kind of bringing these people together, they were able to help us learn, really quickly, right? So I wouldn't necessarily say it was an executive coach or any kind of resources we were provided by investors, but it was really getting to know some of the top founders in the world and understanding how did they make the decisions that have kind of gotten them to where they are today. And how can we kind of replicate that decision-making framework for specific areas where they might be best at, right? So talking to the best recruiters with how to hire, right? Or talking to the best salespeople, with how to run sales processes. And I think a really important piece of advice Mike Moritz offered us at Sequoia. He was one of the managing partners at Sequoia, one of the most legendary investors of all time. He had said, like, hey, it's simple, but if you want to learn something, right, go to the person that you think knows this particular area or this particular topic best in the world and ask them what's their advice, right? And as simple as it is, if you actually apply it, it's very intuitive and it helps you learn very quickly.
Yeah, and I think the other thing there is a lot of that also is combined with like intuition. Like I think a lot of decision making early on, you do have to trust your gut a little bit. And I think there are things where, early on in the process, we made a lot of decisions that were contrary to what a lot of people told us. I think early on we were told a ton of times, don't go to the financial advisor, you could build a robo advice product directly to the consumer. And I think tons of messaging around that. But at the end of the day, like everyone's only going to be able to provide you their perspective, and you're the one out here like building this business. And so trust yourself a little bit more. I think we learned that a ton. We also benefited from this being our second venture. So I think that was interesting, as well as having like the learnings from one company and being able to take that into the second one. I think the final thing there is kind of what Samir touched on, which is like figure out who's really good at something and ask them things like, okay, who are the 5 best people that you've ever met with X? Figuring out what good looks like and then going out and recruiting people who are really good.
I really like that approach. It's interesting at kind of combining what you're both just saying. I think they're very complementary of each other, right? If you have some level of self-doubt, and everybody is going to have that when you're building a company, seek out people who have either done it before or handled the challenge you're facing and ask them how they do it or how they would approach, right? Don't be afraid to ask. And I think so many people are afraid. There's that concept that's really rampant in the entrepreneurial circles, that imposter syndrome feeling that you're so afraid to let people know you don't know, or that you have some uncertainty that you don't ask. But you started the business and you should have a high level of confidence in there. And like you said, trust your gut about where you're going. But that doesn't mean you don't occasionally ask somebody, hey, how would you do?
Yeah, for sure. No, I think I had a tweet. I said like the best way to solve problems is literally just to talk to other founders because someone else has probably already solved that problem and they have the solution, so might as well ask them. And I think that tweet really resonated. But it's just so important to recognize that most problems have been solved. And it's important to find the person that has the solution.
Yeah. Speaking of asking other people, so one of the traditions we have on this podcast, and I have at the SoFin event at South by Southwest each year, is an ask of the audience. So if you get on stage at SoFin, you should come prepared to ask the people that are there listening to you present your startup to the world for something, right? And the same goes here on this show, right? Come to the podcast, have something you like. So you're at a really interesting growth phase of the company. You just raised a big chunk of growth capital. The future is looking bright. You're ready to just go out and conquer the world, if you will. What is the ask you have of the audience?
I think to me, it's two approaches. If you're kind of an onlooker listening to this, definitely, if you have a financial advisor, tell your financial advisor about us. And then if you are a financial advisor, check out Vise. I think for us, like we're incredibly excited to just deliver better investment advice. I think that's really the mission of the business is increase access to investment advice and deliver better investment advice to the end consumer. And so if you're watching or listening, excuse me, and you kind of want to go in and use Vise, definitely ask your financial advisor about us. But also, I think on top of that, consider a financial advisor. If you don't use a financial advisor today, I think they provide a ton of value, and they kind of help you think about your financial plan. They help you think about improving financial literacy and visualizing what retirement looks like, but also on the investment management side. So, a bit of a two-pronged approach. If you have a financial advisor, recommend for them to look at Vise. And if you don't, consider getting one.
I like it. How about you, Samir?
Yeah, I think one thing that we're doing right now that we're going to continue to do, which is really important, is just find the best people to work for us. So if you feel like, you're a really strong salesperson, right, or a great engineer, or maybe you just don't know, but, you think you'd be great for the company, always feel free to reach out. And I think that sometimes the most interesting people come in with kind of no expectations, but we can figure something out.
I love it. Yeah, I'm glad you put that out there because reaching out for talent. I mean, there is still a war for talent, even though we are in this pandemic and there's a lot of unemployment in a variety of different sectors. Getting high quality people is so important, right? So if you are somebody who's interested in space, absolutely reach out to Vise. It's great.
Yeah, I mean, we're only looking for the best talent, but I think the best doesn't necessarily have a set definition. So if you think you're the best, feel free to reach out.
That's awesome. Kind of getting ready to wrap it up here. I wondered if you might be willing to share some lessons or ideas that you've stolen from other verticals that you're finding useful for Vise. And the reason why I'm asking this question is our space, as you pointed out earlier, is often very insular, right? You mentioned that the mutual fund industry hasn't changed in 40 years. Is that because other business ideas didn't exist and other innovations didn't exist outside the space? No, of course not, right? It's just because you roll with momentum sometimes, right?
I think that's a really strong question because so much of what we do is stealing from other verticals, right? And figuring out, okay, if something works really well in enterprise SaaS, why can't it work well in financial advisory, wealth management, right? And trying to understand what works really well in other spaces to this. And I think, as we were just talking about talent, one really crucial thing is we're oftentimes looking for both undiscovered talent and also talent that doesn't necessarily have a full background in the space, right? Because as we were talking about new perspective, talent, like someone who is a really strong machine learning engineer at Google, right, might be a really great quant on the financial engineering side, right? Or someone who was a really strong salesperson at Oracle, right, might be really great at selling to RIAs. It's so great isn't just necessarily measured in who has the best experience or who's been the strongest mutual fund wholesaler or been in the industry for a long time, but it's finding people who can understand the nuances of this industry, who can learn very quickly and figure out how to do it better, even if they don't have the background.
That's a good perspective. How about you, Runik? On the technical side, what are some of the concepts that you've looked at in other industries and stolen from?
Yeah, it's a great question. So I think there's two pieces. I think the distribution and like business approach. One thing I think that we've internalized that actually comes from Stripe, when John and Patrick are investors in the company, is actually betting on small advisors who've just broken away. They may manage 5, 10, $15 million today, but in a year or 2 years, they may manage over $100 million or $250 million. And those high growing smaller advisors, it's very similar to what Stripe did in the early days, where they bet on small startups. And Stripe's a payments API, and so they allowed smaller startups to use their API, and those startups grew to Uber, Lyft, Airbnb, these massive companies that are now massive contracts. And it may have been very difficult for early on for Stripe to sell into Uber, but because Uber grew, to this multi-billion-dollar company that they are today on top of Stripe, it allowed them to capture their entire business. And so it's that same approach and ethos that we take is, we bet on the smaller RIAs. And and hopefully benefit with their growth as well. And so I think that's another interesting ethos and approach that we've stolen from another vertical and from Stripe. And then I think on a technical approach, there's a lot I think we take from quantitative hedge funds like the DE Shaws, the Two Sigmas, and the Citadels of the world in terms of just approach, thinking about building and managing portfolios on a custom basis, simulating performance, creating simulations. And so I think the traditional investment management advisory approach that exists today in wealth management has done an okay job over the last 15 to 20 years, but does not necessarily do a good job customizing to that client's needs. And so we've kind of borrowed a little bit from the quantitative hedge fund realm as well in terms of how we think about building and constructing portfolios.
I love it. I love it. So it's interesting listening to you talk there, Runik. I almost feel like you may be giving us a glimpse into the future of Vise, right? The growth path is, and we've seen this in other places too, right? You know, the 37 Signals guys, now Basecamp, focused on smaller businesses, and then a lot of the businesses that continue to use Basecamp and grow and so forth. So going after companies that can't afford to build their own solution out of the box, right? They need something that's scalable and easily implementable in their business. And then as they grow, you grow. But then also as they grow and kind of prove the concept to the market, larger firms will find it more attractive. And so I envisioned at some point in time, that's kind of where you're thinking of it as you grow, thinking going after more enterprise scale RIAs and then other segments of the market, like maybe independent broker dealers and so forth.
Of course.
It's awesome. Really cool. Well, gentlemen, this has been a fantastic experience for me on this side of the microphone. I hope you guys
That's been a lot of fun for us.
Yeah. I know I got a lot out of it, and I assume the listeners did as well. I know people can swing by Vise.com to check out the solution and book a demo. What are some other ways that they can reach out and follow along with the progress?
Yeah. I mean, feel free to reach out to my email directly. It's just sv@vise.com. I usually always answer, at least I try to. And I mean, I think, subscribe to our newsletter on the website. That's gotten really interesting so far. We just like to cover different topics on a week-to-week basis. And follow us on Twitter, LinkedIn, Facebook, whatever medium suits you best.
Very good. Well, thank you, gentlemen. Really appreciate it. Have a good one.
Thanks for having us.
Thanks, Mike.
Thank you very much for listening to this episode of the SoFin Podcast. I hope you enjoyed the show. And if you did, make sure you like and subscribe to the podcast on Apple, Spotify, Stitcher, Google, wherever you like to get your podcast, jam on. We really appreciate the likes as well. Make sure you give it a like, a little thumbs up action and a comment. And really make sure you share it with a friend. Chances are you know somebody who will find this episode really interesting. And by the way, if you're liking this show, make sure you check out the Modern Financial Advisor podcast by Truelytics and the Advisor Financing Forum podcast by Skyview Partners. You can find both of those on all of those podcasting platforms, or you can just swing by finservmarketing.com/podcast. And all the podcasts that we're producing are going to be found there. And of course, you'll also find them on the clients' websites as well. But good place to just kind of find them all in one spot. And as we're adding the new ones, a couple in the works, by the way, a little hint, they'll be listed there as well. So great place for discovery. Okay. Also, of course, huge thanks to Runik and Samir for joining us today for this podcast. I really enjoyed the conversation. This is the second podcast, as I mentioned, that I've had the opportunity to spend time with Runik and Samir, and I've enjoyed them both, but I've also found myself learning some stuff, which is always kind of the goal, frankly, when you get a chance to sit down with entrepreneurs and ask them about their story or go a little deeper on their product and solution and how they're solving problems. You pick up things. And I picked up quite a few things from this episode, and I actually found myself making a few notes, and I hope you did as well. I hope you're getting some good stuff out of this show. Now, a little bit of compensation for the guests, right, from you is please do help them when they're asked, right? Make sure you let your financial advisor know about Vise. As a client, as an investor, maybe you should go to Vise.com yourself and kind of get a little more up to speed on what it is they're doing, right? And by the way, you heard they're hiring, right? So whether it's you or someone you know in your network, check out Vise, check out their careers, reach out to the guys if you know somebody who you think would be really good for their team. And even if that somebody is you, right? This is going to be one of those companies you want to get involved with early. Okay. Lastly, make sure you send in your questions or suggestions for guests or topics for the show. That's how people end up on these podcasts, by the way. I mean, sometimes I already knew the person, but more often than not, I get a suggestion from somebody, whether it's via email, mike@finservmarketing.com, or social, I'm at Mike Langford, basically everywhere, or however to get through the end around, the LinkedIn message, whatever it is. But that's actually how Runik and Samir got here. Kelly Ferraro sent in a note to me saying, hey, Mike, these guys have built something really exciting. You might want to get them on your podcast. I think they'd be really great for your audience. So, connected with them. The answer is yeah. I think they would be exciting for the audience. So here we have it. And a lifelong friendship, I think, is born between me, Runik, and Samir. And I'm a huge fan of Vise, as you can tell. So awesome stuff. So again, send in those questions and suggestions for guests, okay? Before I let you go, you know the drill. Make sure you stay safe and healthy. Please do wear your mask, keep your distance, wash your hands and that kind of jazz. And of course, be nice to each other. We really need it right now. Stop yelling at each other. Be nice to each other. Focus on the good stuff. Help each other, okay? We will see you next time on the SoFin Podcast. See ya. Bye.